Hi, I am Anna. I come from www.ntvforex.com. Asian markets attempt stall recovery. http ntvforex.com news ID 0D976E 7/17/2026 18:49 am. In aviation, a stall is basically a condition where the pilot allows the aircraft's speed to drop so low that the wings stop generating lift, never an optimal condition. The recovery is usually quite simple: push the nose down to regain speed, apply more power and pull out of the ensuing dive. In fact, as a pilot, stall recovery is pretty much the first thing you learn, after being able to get off the runway in a straight line. Of course there are stalls, and there are stalls. Training aircraft are designed to have benign, easily recoverable stalls, unsurprisingly. They will even kindly buffet and shake to warn you it's about to happen. Other higher performance aircraft I have flown are altogether different animals in the stall. On my first trip in a high performance glider, as opposed to the training glider, I got too slow in a turn. The highly strung beast snapped left and went straight into a spin. My instructor behind me knew it was coming. They have an odd sense of humor. The key is having enough altitude to recover, which is why you try not to stall after takeoff, or on approach to land. In mid-March, equity markets crossed controls in the stall, pulled the nose up and went into an aggressive spin. Their record highs gave more than enough altitude to recovery, albeit leaving investors in a cold sweat afterwards. The perils of stalling to close to the ground, though, were laid bare by the negative price shock of the May WTI futures settlement. That resulted in a smoking hole in the field for many investors. Investors hoping for a continuation of V-shaped peak virus price action overnight were somewhat disappointed. Chinese equities endured a torrid day with both the Shanghai Composite and CSI falling over 4.0% as momentum aggressively stalled. Luckily, after a huge run higher, the retail investor-dominated markets had plenty of altitude to recover. Across Europe and North America, the stall across asset classes was rather more benign. A gentle buffet and push the stick down as momentum stalled on equities, currency markets, and energy. Much has been made of the mixed signals from Netflix and the US data overnight. Netflix added lots of subscribers but said further growth level at that rate would be challenging. The 10% drop in its share price was limited to just Netflix though. The US retail sales data rose, but future improvement is threatened by the fallout from the exploding number of COVID-19 cases across America. Initial jobless and continuing claims both improved slightly, but the rate of improvement is stalling. They are stuck stubbornly around 1.4 million and 17 million respectively. Equity markets had already fallen before all the data came out, so we should avoid fitting facts to explain the price action. The price action overnight looks like nothing more than a loss of momentum, and a benign stall. Asset markets have plenty of central banks-induced altitude to recover from the mild stall and modest dive. That is what Asia looks like it is doing today. Some days, a gentle recovery to straight and level is just what it says on the tin, no conspiracies necessary. The data calendar in Asia today is very quiet, as it is across Europe and the United States. Earnings season has passed without incident this week and looks set for much of the same this evening. Most attention will be on the European Union Leaders' Summit, which is meeting to continue negotiations about the nature of the €750 billion Pandemic Recovery Fund. It is unlikely a final deal will emerge today with the Frugal Four and Club Med nations still far apart. However, signals of forward progress should be enough to keep the euro firm versus the US dollar and sterling. That said, a breakdown in progress could set the single currency up for a negative finish, with so much forward momentum already priced into it. Financial markets, whilst vulnerable to headline-induced clear air turbulence, seem content on finishing the week in straight and level flight. Perhaps with a little stalling practice along the way. Asian equities are mixed today. Asian equity markets are painting a mixed picture today following a modestly negative New York session. For the most part, the major indices are trading each side of unchanged. Most of the attention has been on mainland China, where the Shanghai Composite and CSI both fell by over 4.0% yesterday afternoon. With mainland markets dominated by retail investor flows, they are by their nature vulnerable to the direction of the stampeding FOMO retail herd. Yesterday looked like a capitulation of the long positioning piled into after the state media organizations urged investors to get long the week before. The joys of a command and control economy. Today, however, things appear much more orderly on the mainland. The Shanghai Composite and CSI 300 0.30% higher in quiet trading. Over in Japan, the Nikkei 225 has edged lower by 0.25%, while Seoul's Kospi is up 0.50%. The Hang Seng is also 0.50% with the Straits Times 0.20% higher after the rebound in non-oil exports. Malaysia has risen 0.60% with Australian markets unchanged on the day. Overall, short-term flows appear to be dominating Asian markets with no overriding theme apparent. Investors seem to have one eye on the door for the weekend. We would expect much the same to be evident in European markets ahead of the EU Leaders' Summit later today. Currency markets are quiet after US dollar gains overnight. With markets generally in consolidation mode, the US dollar clawed back some of its recent losses overnight, the dollar index rising 0.30% to 96.34. The trend was most noticeable in recent outperformers, with the UAD-USD and NZD-USD both falling 0.50%. Elsewhere amongst the majors though, the effect of the stall in momentum was much more benign, with EUR-USD edging back below 1.1400 to 1.1390. I note now that NZD-USD has formed quite strong technical resistance at 0.6600, having failed ahead of it 3 times over the past week. The 0.7000 region has become somewhat of an intraday pivot point for AUD-USD, which seems content to range between 0.6970 and 0.7030 for now. The Bank of Indonesia has been officially intervening to sell USD IDR this morning. The BI has been a vocal interventionist in recent months, with the central bank making clear it felt the rupiah was undervalued. The USD IDR is unchanged at 14,630.00 today, suggesting that the buy action this morning are more smoothing than drawing a line in the sand. Across Asia, the US dollar has edged gently lower versus the majors as Asian stock markets hold their own. Asian regional currencies are virtually comatose today, being unchanged versus the greenback. With the EU summit convening today on the pandemic recovery package, most eyes will be on EUR-USD. A positive outcome should see the single currency retest the week's highs at 1.1450. An unfavorable outcome will see the 1.1370 support tested in a potentially deeper correction, possibly as far as 1.1300. Oil's short-term momentum stalls. In line with price action elsewhere, profit-taking seemed to be the order of the day in energy markets. Both Brent crude and WTI beat a gentle retreat as short-term momentum stalled. Brent crude edged 0.60% lower to $43.40 a barrel, and WTI fell a modest 0.70% to $40.70 a barrel. Both contracts are unchanged in Asia in a moribund session. Although oil prices have stalled, the buffet is gentle and not a prelude to an incipient spin lower. Both contracts are comfortably ranging at the upper end of their recent price levels. Brent crude has critical resistance at $44 a barrel, and $42 a barrel for WTI. Markets have assimilated the impending increase in OPEC production without incident. As long as the price action across financial markets remains corrective, and not structural, oil's consolidation should continue. Profit-taking pushes gold lower. Gold fell 0.70% to $1,497 an ounce overnight, as investors looked at the price action elsewhere and decided to book profits ahead of the weekend. In line with the flatline volatility elsewhere in Asia's session, gold is almost unchanged at $1,498 an ounce this morning. Support in gold remains between $1,480 and $1,490 an ounce, and as long as this region holds, gold's price action at these levels remains consolidative, if somewhat directionless. A move through $1,680 an ounce implies a deeper correction, possibly as far as $1,750 an ounce. Resistance at $1,819 an ounce remains the main barrier to further gold gains. It is unlikely to be tested in the upcoming New York session though, with price action implying another range trading day is ahead. Subscribe our channel to receive the news as soon as possible. Thank you for watching.